Let's start with price. So 2023 was a banner year for crypto after a pretty ugly one in 2022. Just what's your reaction to this 150+% rally that we've seen for the cryptocurrency this year, especially as the CEO of a mining company?
Well, the mining stocks typically tend to have a beta to the price of Bitcoin. So while Bitcoin saw a decline from a peak of in the mid 60s down to 15,000 at the beginning of this year, the mining stock saw a 97% drop. We were down at $3.11, I think was our low for the year. And here we are sitting in the 23-ish dollars. So yeah, you definitely see the beta at work there between the mining stocks and Bitcoin. But I think that Bitcoin is driven by global liquidity. When it's risk off and people need to take money, they're going to sell off parts of their portfolio depending on either their risk tolerance or where they think investments are going to grow. And crypto being a very volatile asset, a lot of investors sold off their crypto. Now this year, you've seen kind of crypto's correlation change. It's much more driven by liquidity. You've seen it really discouple from NASDAQ. You've seen it discouple from Dow. And it's had some correlation to gold as both of them kind of rolled up in value towards the end of this year. But I think you're going to continue to see Bitcoin specifically operate as an asset that really has its own set of criteria that drive it, but very driven by global liquidity. At the end of the day, you've got a market where 75%-ish of the liquid supply hasn't moved in 12 months, and you've got 1.5 million-ish kind of Bitcoin in circulation on exchanges. That's not a lot of liquidity for the demand that people see coming forward, and we're going to a halving cycle. We have a lot of positive potential signals, ETFs, et cetera, for next year. So I think it's going to be a very interesting 2024.
Yeah, you mentioned the halving, and I'm going to get to some of those catalysts in just a moment. But I want to go back to something you said at the start of that, which was, mining stocks and mining companies had a particularly tough year at the end of 2022 and for a good deal of 2023. Can you talk about how Marathon or even some of your competitors weathered the storm of high energy costs, low volume, when many others just didn't make it?
Yeah, so it's really a question of how you structure your balance sheet. If you look at the miners that didn't make it, Core, for example, declared bankruptcy. Core at the time was most probably the biggest miner out there. And part of the reason was debt. They had a lot of debt, very high interest rate. They had equipment financing. And those are all things that make it difficult in a down cycle when you can't raise money by selling equity, when you can't raise money by raising more debt, and you have to service existing debt. It becomes very difficult, especially as Bitcoin prices drop, and every dollar of revenue you have from the Bitcoin you receive, you have to use to pay for energy costs. I think what you're going to see differently in this cycle is it's going to be a lot harder for people to get to borrow money, get equipment financing. But I think where it really becomes important to look is at the halving, because if you're not in a position where you're kind of in the lowest half from a cost perspective to mine Bitcoin, you may be in a difficult situation. Bitcoin here at around 44, with global hash rate continuing to grow, and it's not slowing, likely we'll see, cost to mine on average in the industry be somewhere in the low to mid 20s. Well, at the halving, unless Bitcoin is above 50K, low to mid 20s is break even.
Let's stick with Marathon's strategy heading into the halving next year. You guys actually just announced a $170 million plus deal to buy 2 mining facilities in Texas and Nebraska. And I'm assuming that you're choosing to expand before the halving, but talk about why you're doing that right now, what the benefit is of making this acquisition now versus waiting for some of the dust to settle after the halving.
Sure. So we spent most of 2023 growing. We entered the year at about 7 exahash, and we're exiting the year at about 25 exahash. Even with the increase in global hash rate, we significantly increased our market share, if you would, of the Bitcoin network. We're about 5% today, roughly. And we intend to continue growing through the rest of this cycle because we believe at the end of the day, scale is very important. And so this purchase of these 2 sites does a couple of things. One, there's sites where we're already mining, so we know the sites very well. it allows us to lower our costs there substantially, because now all of a sudden we'll be effectively the operator over time. We're able to immediately expand. We believe that capacity, meaning shelf space, has been the constraint and will be the constraint in the early parts of 2024. Rig pricing is still very low. Rigs are generally pretty available, though that will change as we continue to go through the bull phase of this cycle. One of the unique things with the purchase of these two sites is the power agreements allow us to not take power when if we choose not to. So as compared to many PPAs where you have to take the power or you have to sell it, here, if energy pricing is high, Bitcoin pricing is low, and the market doesn't provide a good arbitrage opportunity, we can just not take the energy.
I want to shift to one other catalyst, and that's spot Bitcoin ETFs. We're poised to get a decision from the SEC on those imminently. How important are those for Bitcoin? We've heard a lot about whether they will get approved and how good they could be for the price if investors buy in. But if I can ask for your contrarian view too, if they don't get approved, what should people expect, especially because we've seen so much hype ahead of those potential approvals?
Yeah, great question. So there are basically three scenarios. One is the SEC approves Grayscale's conversion and the ETF applications. That's what the market has priced in. And so you have these catalysts for 2024, which are these ETFs being approved. You have the halving cycle, where people believe that Bitcoin is going to follow a pattern that has nothing to do with economic cycles. My contrarian view there is it's global liquidity that drives Bitcoin more so than halving cycles. And if you mirror the halving cycles over global liquidity patterns, you will see they match perfectly historically over prior patterns. And Satoshi was quite focused on that when he actually wrote the white paper, because it was in response to the global financial crisis. Other scenario for 2024 is that the ETFs are approved, but the Grayscale conversion is not approved. Then you'll see a dampening, most probably, in the elation of the marketplace, if you would. And you may see some sideways choppy movement in the price of Bitcoin. Last of all, you may see a denial, in which case you will likely see a drop down to 30K, and the market's going to reconsolidate, and people are going to be scratching their heads wondering what's going to happen. I don't think scenario 3 is likely. I think scenario 2 is very likely. I think what we may very well see is, let's say scenario 2 is the kind of option. Then you'll see likely once they're approved, there's a lag between approval and going effective, meaning they can actually go out and sell shares. That's anywhere from 30 to 60 days. You're seeing a lot of preparations being put in place today. So most probably closer to 30 than the 60 days. When that happens, so you'll have the approval, then you'll have some selling off of the price. I think, it's always this, buy the rumor, sell the news. Once you have the news, you'll see some people do some profit taking. Then people are going to be very concerned with looking at the number of what the uptake is. How are the capital flows going into these things? If you go back to 2021, when we had the futures ETFs come online, everybody was very watchful, and the uptake wasn't as exciting as expected. And especially now, people are very focused on Bitcoin, comparing it to the gold ETFs. And so if you don't have, billions of dollars flowing into these quite quickly, you may see some stagnation or potential sell-off in Bitcoin, again, because it's kind of the bubble's been burst. So you have this buy the rumor, sell the news. With the approvals in January, you have another event when the inflows start happening. Then you have the halving. And then the expectation, if you follow historical cycles, would be that you'll have a run up towards the end of the year, at which point you would, in theory, surpass the last all-time high. I think a lot of analysts today are prognosticating or projecting that Bitcoin will exit 2024 somewhere in the 70 to 100,000 range, which would be, again, beating the last all-time high.